A recent jobs report has sent shockwaves through the U.S. financial markets, sparking a wave of expectations and optimism. The August jobs data fell short, and this has fueled the belief that the Federal Reserve will cut interest rates soon. But here's where it gets controversial. The extent of these rate cuts is now up for debate. U.S. equity markets took a hit on Friday, despite the disappointing jobs report. Non-farm payrolls grew by a mere 22,000 in August, falling well below expectations. This, coupled with an increase in the unemployment rate to 4.3%, has led many to believe that the Fed will resume its rate-cutting cycle in just over a week. The potential for aggressive rate cuts is now on the table. A 25 basis point cut seems almost certain, but if the upcoming labor market revision reaches a certain threshold, calls for a 50 basis point cut will intensify. This decision will have significant implications for the U.S. economy and financial markets. The Fed's recent shift towards a more dovish stance has further fueled expectations of rate cuts. At Jackson Hole, the risk of a labor market slowdown was highlighted as a more pressing concern than persistent inflation. As a result, the interest rate market is pricing in a series of Fed rate cuts with about 68 basis points expected by year-end and a cumulative 150 basis points by December 2026. Looking ahead, the upcoming Consumer Price Index (CPI) report on Thursday will be a key indicator. For August, headline inflation is expected to rise to 2.9%. Its highest level since January. However, the Fed's focus on the labor market suggests that this uptick in inflation may not deter them from cutting rates. In terms of technical analysis, the Nasdaq 100 and S&P 500 indices are at crucial junctures. A break above certain resistance levels could indicate a resumption of the uptrend, while a fall below support levels may signal a deeper pullback. This is a critical time for the U.S. economy and financial markets. The Fed's decision on rate cuts will have far-reaching consequences, and the upcoming economic updates will provide crucial insights. Will the Fed's actions match its words? And what does this mean for investors? These are the questions on everyone's minds as we navigate this complex economic landscape.